Water depth, transition to full development distance from the coast of Rio de Janeiro. Production through the early production system. Length, production capacity, water treatment capacity, total storage, and pumping system of Petrogel, a new and robust multi-phase pumping system with high operating reliability. Reduction of maintenance workovers for a estimated minimum period of 10 years. Here are the main landmarks already achieved, our main milestones achieved by the company so far. Approval of phases 1 and 2 of investments at Atlanta. First quarter, arrival of FPSO at the Dry Docks World in Dubai. Beginning of the FPSO works of Atlanta. First dry docking of Atlanta FPSO. Completion of drilling and completion of well number 5. Atlanta new accumulation test. Installation of Christmas trees, wet Christmas trees for wells number 6 and 7. Acquisition of Atlanta FPSO by Insan. Installation of the superstructure of the second dry docking of FPSO Atlanta. Conclusion of drilling, completion of wells 6 and 7. Start of installation campaign. Obtaining the prior installation license. More than 85% already realized. 85% of the works towards 50,000 barrels a day with first oil in mid-2024. Good day, everyone. Welcome to Enauta's video conference call to discuss third quarter 2023 earnings. Before we begin the presentation, I would like to make some important announcements. This event is being broadcast live with simultaneous translation into English. The presentation is available for download at Enauta's IR website, as well as here on the webcast platform. After the presentation, we will begin the Q&A session. To ask a question, please use the Q&A button of the platform. You can find it at the bottom of your screen. If you prefer to ask your questions in writing, please write your name, company, and the question in the Q&A button. If you prefer to ask a live question, just write your name and company in the Q&A. Before proceeding, let me mention that forward-looking statements that might be made during this conference call relative to Enauta's business perspectives, projections, and operating and financial goals are based on the beliefs and assumptions of Enauta's management and on information currently available to the company. Forward-looking statements are not a guarantee of performance. They involve risks, uncertainties, and assumptions as they relate to future events, and therefore depend on circumstances that may or may not occur. Investors should understand that general economic conditions, industry conditions, and other operating factors can significantly affect the future performance of Enauta and can cause results to differ materially from those expressed in such forward-looking statements. Today with us, we have the company's CEO, Décio Oddone, the Chief Financial and Investor Relations Officer, Pedro Medeiros, and the Chief Operating Officer, Carlos Mastrangelo, who is connected from Dubai. I would now like to turn the floor to Mr. Pedro Medeiros. You may begin, sir. Thank you, operator. I'd like to thank you for joining us in this video conference call to discuss third quarter earnings results. We prepared a summarized material of our plans that we expect to execute at Enauta and talk about the performance of the quarter, both from the financial and operational standpoint. I'd like to discuss the evolution of our main project, the delivery of FPSO Atlanta, and the conclusion of Atlanta Phase 1, and I'd like to discuss with you the capital allocation strategy of the company. So this quarter, we start with the highlights, moving straight to the point. Third quarter was a very event-rich quarter, and also in terms of performance. And these highlights are divided into many aspects. First, regarding the Atlanta project, we crossed some milestones and stages of high risk in the execution of the project. I highlight the completion of the 6 production wells at Atlanta Phase 1, the transfer of FPSO Atlanta to Inson after exercising a purchase option of the equipment, and then started a 15-year chartering contract. Number 3, the issuance of environmental licenses associated with Phase 1 of Atlanta, and therefore the start of the anchoring campaign of the platform. We installed a number of torpedo anchors that will handle the platform and part of the subsea equipment that connect the wells to the equipment. In parallel, the company also went through a number of changes, among them the consolidation of an independent governance. The company changed its ownership structure, which determined a broad review and restructuring of our board of directors, which became basically mostly independent. Regarding our capital allocation in this quarter, we concluded the issuance of our second debentures, reinforcing the balance sheet of the company by 1.1 billion BRL. More than that, looking forward, we have a wide map of deliverables. And we are working hard and we're very much focused on these deliveries. In Q4, we can already return or resume production at the Atlanta pilot system. This resumption occurred now on November 5th, and we are returning production to levels very similar to the best moments of the pilot system, and already counting on a technology which is slightly better than what we previously talked about. In the short term, we also have some events associated with governance and the company's transition to a company closer to a corporation. Among them, the board of directors discussed a long-term incentives plan associating compensation of a good part of the company's team to the company's appreciation in the long term. Very soon, you will be invited to the first Enauta Investor Day to take place in December. Next slide, please. In this case, now we will turn the floor to our COO, Carlos Mastrangelo, who is in Dubai at this point, and he will speak more about Phase 1 of Atlanta and how the project is evolving. Thank you, Pedro. Now to continue the Atlanta project, I am now in Dubai, arranging the details for the FPSO relocation next year. We finished the second dry docking. We'll have the last one in the beginning of January. It is the last one so that we can do the maritime tests and relocate the unit to Brazil, as mentioned by Pedro. This FPSO will go directly to location to be connected with the system of ties and anchoring that is being installed now during the campaign to install the system that will allow for a direct interconnection with the FPSO, anchoring the FPSO. And since we already have the license for installation, soon after that, we'll connect the risers, the flexible risers. And the schedule is going on budget and on schedule. First oil is expected for August. This is a robust date for our project. On the next slide, please. Here, I have a couple of pictures of the subsea pumping equipment. They are also a critical part, and this equipment will be delivered by year-end. We have 3 pumping modules. The first one is being completed. It will be completed by year-end. And after that, it will be transported to Brazil. Should be arriving by February or March. But everything is moving ahead as planned. No deviations, all as planned and on budget. The risers are also being delivered and will be all delivered by year-end. In the beginning of next year, they should be going to Brazil. So it's all on schedule, on budget, as approved last year. So I'll turn the floor back to Pedro. Next slide, please. Now talking about the results of Q3. In a very summarized way, we present this slide to practically underscore that this quarter was deeply impacted by the Atlanta production stoppage and some events that occurred at Manati Field, particularly a low production in the month of September. And this production has already fully recovered. And this was due to a specific seasonality in the natural gas market of that region. Secondly, this quarter was also marked by some important reviews in the company's capital allocation strategy. Among them, the choice made by Enauta to assign its stake in the Espírito Santo block that led to an accounting write-off impacting our results. But this has no direct impact on the cash, but impacting the accounting results of the quarter. Next slide, please. Having said that, I think it is worthwhile highlighting that resumption of production at Atlanta makes us now focus on the future results of the company. Q4 results should already post a recovery and a full recovery of our production expectations at Atlanta by year-end. In the beginning of November, the company was capable to return production of the first well number 5, with production stabilized at around 12,000 barrels a day. We have a schedule of implementation and return of production of the next wells at Atlanta Field, and this will return the production rate at the end of December close to the levels presented in the pilot project, historically speaking. In parallel, also in the natural gas market, as I mentioned before, Q3 was impacted specifically by an exceptional market event that occurred in September. October data already show productivity returning to what is expected from Manati Field, still below the operating capacity of the field. But along Q4, our expectation is that we'll return production fully to what is expected along the month of December. Consequently, Q4 results and future results of the company will be a better reflection of the potential financial result that these two fields provide to the company. On the next slide, trying to translate this into the financial aspects, we have these two charts that show the potential net revenue of the fields linked to production levels, and in parallel, the performance of operating costs, cash of the main projects in terms of oil and natural gas. If we look at historical levels, we can see the level of operating leverage and consequently the expected margins for the projects, given that production will be returned to regular levels. Second point, operating cost and cash are presented in local currency. In foreign currency, these costs are relatively stable, with a strong discipline by the company in terms of operating costs of the company's main projects. I just want to underscore the potential margins the moment that we return production to expected levels. Next slide.
Talking about capital allocation, the company recently had the approval of the budget for 2024. We have some new facts to show. On the left-hand side, we show a historical evolution of CapEx of 2023, and we underscore here the recent performance and mostly the completion of risk steps that were very deep and also very significant in the execution of Phase 1 in Atlanta. They were overcome, allowing us to optimize our CapEx for 2024 and also the end of the completion of this project. Going forward, it's worth mentioning that our expected total investment until first oil of $285 million will be added to investment of $95 million approximately to conclude Phase 1 in Atlanta, however, expected to happen after delivery of first oil. Also considering the cash flow for the first wells coming from this project. The second highlight is a budget approval, a specific approval to move forward and speed up potential development in Oliva Field. Oliva Field is an oil field which shares several characteristics with Atlanta's, 15 to 20 kilometers away from Atlanta Field. Very special characteristics associated to Oliva's development. Right now, Oliva is a project that is expected to be part of one of the future phases of Atlanta, and we're already earmarking a specific budget to try to speed up the development and monetization of the field. This decision, as we saw in the previous map, is expected to happen over the second half of next year. Next slide, please. Last but not least, capital allocation. We highlight the robust budget of the company. We have more than $400 million cash and cash equivalent posted in third quarter 2023. This quarter was also highlighted by the beginning of entering into credit receivables, which are long-term associated to FPSO Atlanta. This is one of the assets that were created owing to the option exercise to purchase the equipment. This was exercised by our contractor INSO, and here we show the balance sheet with net assets, a very robust base, $732 million, which is compatible to a long-term schedule of debt amortization, which allows the company to have a special look not only in organic growth steps, but also potential resumption of inorganic activities in the oil and gas market in Brazil and in other regions as well. Next slide. Now I give the floor to our CEO, Décio Oddoni, so he can make more comments on partnerships and portfolio management. Good morning, everyone. Thank you for joining us in this call about the earnings of the third quarter. Pedro and Mastrangelo already shared the operational aspects. As a reminder, this quarter was affected by the production downtime that was scheduled to resume in September. But because we had logistical challenges to have access to the equipment to be installed in the pilot wells in Atlanta, we expected to come back with 2 wells as we previously mentioned. And this gives us an expected leverage in our production for the future. In Atlanta, like Mastrangelo said, we're moving forward on time, on budget, and we have a license for installation. Launching debentures, which gives some confidence in capital structure, and Atlanta's Phase 2 is very well aligned with Oliva. Oliva is an opportunity that is part of the ring fence, which is Atlanta's field. It's an opportunity that, combined with the development of Phase 2 in Atlanta and other potential area in the same region inside and outside the block, may bring a production cluster to Enauta. And in the future, we may capture a lot of logistical and operational advantage, creating an area that can bring good results for us. This portfolio management that we've been ongoing working on, and we are enhancing right now, has an assumption of some risk criteria, investments and return terms. Based on that, this quarter we decided to move away from Espírito Santo. Owing to this precise parameter, this is a high-risk project, high investment rate, and long-term of potential, which does not fit in the projection or project portfolio that Enauta is pursuing. So we keep on working on portfolio management, both in terms of our current portfolio and also other potential opportunities to expand the company, always respecting these criteria of risk, investment, return time, and level of return. With that, I close our presentation that we had for today, and now we'll be here to take questions that you may have. Thank you. We'll begin now the question and answer session for investors and analysts. If you want to ask questions live, please type your name and your company name on the Q&A field. If you want your question to be read, please write your name, your company name, and type your question on the Q&A field. First question, Luis Carvalho with UBS. Please, Luis, you may begin. You're unmuted. Hello, Décio, Pedro, Mastrangelo. Good morning. Thank you for taking our questions. I have a couple of questions, but perhaps I'd like to address 2 or 3 questions. And if there is time, I can come back for a follow-up. Firstly, just to have an update, a more qualitative update about Atlanta side. Is there anything specific, not only the startup of the FPSO, like Mastrangelo said, but anything new about your confidence in the project? It would be interesting to know. And concerning this, what about a potential development of Oliva, considering the distance between both fields? Just to confirm, this involves a tieback with the same unit, right? Second question. This is about the long-term incentive plan. Pedro, that's something that we discussed a while ago. I wonder if you give us more color on what is being designed. You already said that naturally there is a big correlation with the price of stock. It would be interesting to have more color. And last but not least, is there any additional thing about what to expect to see about reserve certification for early next year? Thank you. Thank you, Luis. Good morning. I had to write down 3 questions, right? So when it comes to Atlanta, Mastrangelo can add more details later on if necessary, but this is on schedule, on time, on budget. We managed to overcome some critical activities of the project, like drilling, engineering, early construction, not to mention licensing and financing as well. So we keep on working on that schedule. August 2024, which was always the deadline established back in February 2022 when we approved it with the board of directors as a date for first oil at Atlanta, and it continues as such. As for Oliva, we've just approved the budget that is more concentrated by the end of next year to evaluate and assess the potential and also the model of development of the field. Please bear in mind this field was developed a while ago by another consortium. Shell introduced to ANP a development plan which considered drilling of 8 wells in Oliva and 3 injector wells. It never happened, so we are revisiting this work, and by the end of next year we expect to have our definition, our decision on how to work on this operation, if it via tieback or maybe including a standalone unit. That's a project that may open the door to other fronts for Enauta in the region. Oh, I said a lot about the incentive plan, so Pedro, maybe you can tell us more about this, and then Mastrangelo can talk about certification. So just let me add to the comments about the long-term incentive plan, and then I turn it over to Mastrangelo to talk about Oliva. Like we said before, this is ongoing at the board. The board's priority, and by the way, this discussion is becoming more mature in recent months. The focus of the program is a program that aligns to have a long-term alignment between the officers of the company, all the teams at the company, and the idea is to be a far-reaching program, including the whole company. In a very competitive manner, we want to retain our professionals and bring more on board for Enauta's growth journey. We expect this plan to be approved over Q4. And it should include both restricted stocks and also options in order to appreciate the share and the stocks via certification or different signs of appreciation at the company. So this is all I can say for the moment. But by and large, we expect this negotiation to migrate to a potential decision in Q4. So just adding to the question, Louis, about confidence in Atlanta, we learned a lot with the early production system. The problem we had with water, production with higher outflow. So we moved into the full development system, which is able to process a lot of water until the life cycle of the field. So when it comes to confidence, we learned a lot. The pilot study played its role to teach us more about this project to lower the risk in the full development system. As for Oliva, I think Décio talked about it already. We're moving to a simpler standalone system with 2 wells, trying to have the project approved by the end of next year. And the last question was about certification, right? We don't expect to see any changes. Everything is in line with the previous certifications. Great. Thank you very much.
Our next question is from Mr. Gabriel Barra with Citi. Mr. Barra, go ahead. Hello, Décio, Pedro, and Mastrangelo. Thank you for taking my questions. I'd like to ask 2 questions and perhaps a follow-up. In terms of capital allocation, I think that there is not much doubt regarding the short term of the company and the focus on Atlanta. But one of the questions I get frequently is, what is the next step? I think that has been a lot of discussion about the consolidation in the oil and gas market in Brazil, the arrival of new players, how this is going to play out. So I'd like to hear from you. How do you see Enauta in this process? I know this is a recurring question in the calls, but now getting close to Atlanta's first oil, this becomes a more important point when we look at the midterm of the company. So if you could elaborate on that and perhaps put into context your portfolio of exploratory assets in Brazil, abroad, farm out of Atlanta, if you can think about that. And my second question is about commercialization. Now, getting closer to Atlanta's first oil, how are you going to be thinking the commercialization of Atlanta's oil? It's a heavy oil, but it has high value given the low sulfur content. So how can you monetize this oil in the best way possible? And a last question, a follow-up for Mastrangelo on Oliva. If you could give us the timeline, just so we have a clear timeline in terms of what to expect of CapEx. I know CapEx is approved for 2024, but what are you planning of total CapEx for 2025? How should we think the timeline? Thank you very much. Thank you, and welcome to the call, Gabriel. The question on commercialization will be answered by Pedro, and the update of Oliva will be answered by Mastrangelo. I'll speak about the next steps of Enauta. We are focused on delivery Atlanta, on budget, on schedule. But we are already seeing that this moment is coming soon. This places Enauta in a different position. We continue to assess opportunities, as I mentioned before, opportunities to expand our portfolio and to diversify our portfolio. That is important for a concentrated company like ours, but always respecting the criteria we use to manage our assets. I'd like to remind you that in exploration, we've been doing this kind of work. We still have a position in the equatorial margin, Foz do Amazonas, Pará, Maranhão, and Sergipe-Alagoas. We continue to evaluate those prospects, but no decision has been made to fully invest in these assets. We have a position in Paraná, which is very promising in the gas area, in a region close to a consumption area with low capex, high risk, but low capex, low risk capex. If we are successful, this can be very interesting. And we continue to look at assets and other opportunities which are not in our portfolio. But any move we make needs to respect the criteria we have in terms of risk, cash generation, time to return on investment. The assets need to add something so as to create value for our shareholders. These are the criteria we continue to take into account to manage our portfolio and when we evaluate future opportunities, when we start living this new moment for the company. I'll turn the floor to Pedro to speak about commercialization, and then Mastrangelo will speak more about Oliva. Thank you, Gabriel, for the question. This is one of the items that we also present in the expected map of events for 2024. As you well noted, today we have a commercialization contract with Shell, where Shell performs some offloads, the logistics and commercialization of our oil directly at the pilot platform. And a good part of this oil is exported. It is sold in markets that fulfill the particularities. One of them you mentioned, i.e. the very, very low sulfur content, which makes oil from Atlanta an oil that supplies a specific market niche. Today, the commercial condition designed, given this contract with Shell, is a condition that allows the company to capture a premium related to the quality of the oil. This premium is not fully visible because it includes idleness cost, and the whole logistics apparatus associated to transport and offload of the oil in the pilot system. When we have the arrival of the new FPSO, the expectation is that the logistics operation will go through a significant change. I'd like to remind you, the new FPSO is designed based on a different hull. It has a much greater capacity of storage compared to the pilot platform. It can do maneuvers and provide logistics support in terms of the offload and transport of the oil. At this point, we are developing a commercialization solution that aims to maximize value for the company and the value of this niche oil. We want to maximize the value that this oil can have and can derive in the different development stages of Atlanta, and also supporting our strategy of capital allocation and organic and inorganic growth in the future. And now I'll turn the floor to Carlos Mastrangelo to speak about Atlanta and Oliva. Thank you, Gabriel. Let me give you a little more color about Oliva. Oliva is about 20 kilometers away from Atlanta. To simplify and to reduce the risks, we are going to have a pilot system implemented, an early production system of a pilot project with 2 wells. It's going to be as simple as possible so we can move ahead fast. Success will depend on the strategy. So we'll have a strategy just like we did with Atlanta, strategy that will be a little different than usual. And this strategy will provide us with more safety in terms of fulfilling the deadlines. We normally don't make mistakes in our deadlines, but if everything runs as expected, by the end of 2024, with the approval of the project, we have an estimation of first oil for the beginning of 2027. It is way too early to speak about CapEx. Of course, we have our own in-house CapEx evaluation for the project once it is approved. But since we are already having some interaction with the market, it is too early to disclose CapEx for the Oliva project. Okay? Super clear. Thank you very much. If I may add something to what Mastrangelo said, because I think this is an important topic. Atlanta counts on several stages. Phase 2 is very close to the design associated with the development of the Oliva project, as Mastrangelo mentioned, because there's great synergy in usage of equipment, in contracting critical equipment, and as we said before, Oliva originally was expected for a future phase of Atlanta, but we have a possibility of bringing forward the first oil of Oliva. That's a possibility we are evaluating and potentially can create a lot of value for the company. Excellent. Thank you very much. Our next question is from Rodrigo Almeida with Santander. Mr. Almeida, you may begin. Thank you. Good day, Décio, Pedro, Mastrangelo, and all the Enauta team. I'd like to ask some follow-up questions. The first one is actually related to FPSO Petrojarl that you currently have. I'd like to connect that perhaps with Oliva and understand your strategy. You have this FPSO, if not mistaken, it was renewal until mid-2025. Does it make sense to keep it with Enauta for another pilot system in the future or something like that? Does it make sense, or this is totally out of the game? That's number one. My second question is about FPSO Atlanta. If we could have some more color regarding the timing of the arrival of the FPSO, how long it will take for it to get to location and for wells connection in months, so that we can kind of map and follow the timeline. We'd like to have some more detail regarding the FPSO Atlanta. And my third point, I'd like to understand along the next weeks and months, what can we expect regarding the new wells being connected in Atlanta's pilot system? What are the characteristics of these wells? Are they very similar to what we saw in well number 5? It would be nice so we can have an idea of cash generation until Atlanta's first oil. That could be very helpful. Thank you. Good morning, Rodrigo. I had to write down your questions so I wouldn't leave anything out. Petrojarl. Well, Petrojarl, who went through a renewal of its license to operate, what we call certification, and that happened in one of the stoppages we had. And it is enabled for 5 years, starting in December of 2022, and it is always an alternative for us at Oliva or some other development we might have. As for the Atlanta timing, Mastrangelo will answer that in a moment. And regarding the new wells, what we did was we had some downtime to adapt the equipment at Atlanta. That stoppage was expected to end in September, but at that moment, we didn't have access to the new equipment available for logistics reasons. The supply chain suffered a lot in recent years globally, and we did not have access to state-of-the-art equipment to use in the pumping system that we currently have linked to Petrojarl. We had access to this new equipment for the first time now in this pumping system on November 5th. We're going to use the same type of equipment in the next pumping system to be installed 30 days after the first one. And we developed some supply alternatives with a different supplier for 30 days later. So 60 days after the first pumping system. So we'll be able to reconnect the third well of Atlanta. And with that, we expect production to increase and to achieve stability at the field starting now. So I'll turn now the floor to Mr. Angelo to speak more about the timing for Atlanta, because he's in Dubai right now, exactly discussing this with the FPSO team. He's discussing the next steps regarding the end of the works, start of decommissioning, and the migration to Brazil. Thank you, Décio. Well, Rodrigo, just to add to what Décio said about the use of Petrogel after Atlanta. And the answer is yes, it is an option for Oliva. Among other alternatives, we are looking into more options. We are not closing any doors to any options. In the market, there are some options for us as well. Regarding Atlanta, the deadline will depend between the deadline for arrival in Brazil and first oil, which is what you're asking about. I think we won't be able to answer your question directly because it will depend on when the FPSO will leave Dubai. For example, we are going to have a visit from the Marine, the Navy, and we'll have a helipad ready so that we can make arrangements for logistics and flights. So it will all depend on when the FPSO leaves here. There's also an inspection by the regulator. So here's what I can tell you. The deadline we have for the project of the deadline of August still remains. And we also await approval of the project. And you also asked about the new wells. We drilled 2 new wells. We didn't expect any change. They're similar to the other wells. So no adjustments were required, nothing to be fixed, and nothing different than expected. Atlanta field is quite uniform. It's a well-behaved field. Perfect. Thank you very much. Have a great week.
Next question, Bruno Montanari with Morgan Stanley. Please go ahead. Good morning. Thank you for taking my questions. Some follow-up questions. Coming back to Oliva. Maybe the idea is to maintain the production plateau at Atlanta, or would you really want to bring more volume on a consolidated basis? I know it's in the same ring fence, but what about specificity of the oil? Are they the same characteristics as you find in Atlanta's current? Maybe a premium in the current? And secondly, did you manage to demobilize FPSO Atlanta? You have the receivables structure, or are you happy with this structure? Or would you consider something else in terms of securitization in order to work better on the cash and also have mid to long-term CapEx funding? Thank you, Bruno. When it comes to Oliva, this oil is slightly lighter than Atlanta's oil. In terms of our operations, firstly, there is great logistics gain, and secondly, very high synergy between these operations in Oliva and the following phases in Atlanta. We still have additional wells to drill in Atlanta and also to drill in Oliva. Our strategy is to bring these campaigns together. It brings a lot of gains, both in terms of contract costs and also bringing more efficiency to our operations. Possibly this will happen together, anticipating Oliva's production, which would be a little bit further away. When it comes to our plan about the financial aspects of the transaction, I would like to ask Pedro to make comments on this. So just adding to what he said, the oil expected to what we're working in Oliva is additional to the forecast of Atlanta's field in phases 1 and 2. This is additional oil trying to, like you said, try to reach the production plateau at Atlanta. This is additional. Your question is great, Bruno. You put it well, because this is the first quarter in which we posted this long-term receivable credit. And it was designed in order to be able to be transferred to the market, capital-wise, to be sold to market or securitized. There are several ways to do that. We're working together with Inson, and actually it is an alternative by the company to have a mid to long-term financing. Our key activity and the kind of return on employed capital that the company pursues, this is beyond the condition return shown in this credit. And our expectation is that this becomes one of the alternatives to bring more efficiency to the company's capital allocation program over the coming months and years. So nothing new to add about this topic. And naturally, here is an asset which is associated to our FPSO in the final step of commissioning and construction. So for the moment, we have this asset perform. The risk nature will also change very significantly. And I believe this will allow us to bring more efficiency in capital allocation. Perfect, thank you. Next question, Monique Greco with Itaú BBA. Please go ahead, Monique. Good morning, Pedro, Décio, Mastrangelo. Thank you for taking my questions. I have 2 questions. My first question, can you give us color on the reserve certificates? I think we already had many questions about Oliva. I'd like to know if we have some expectation of reserve certificates, something more specific about Oliva. And my second question is more about the regulatory context of the sector. Décio is very much involved in these issues. Earlier this year, we had an import on exports. It took everybody by surprise. And in your case, considering FPSO Atlanta, what about discussions about Repetro? They could also have an impact. So I'd like to know what you expect to see in this regard. Do you consider any changes in the taxation of the project, something that might affect the investment parameters that are being negotiated to complete the project? These are my questions. Thank you. First, I'm going to answer your second question, Monique, and then Mastrangelo is going to give you more color on reserves and potential resources in Oliva. We don't see any impact on Atlanta's investment stemming from any tax reform, so much so that Repetro is preserved as it was in the Senate and the House of Representatives, as far as I know. So that's not a point of concern for us today. As for export tax, 9.2%, and it was in force on a temporary basis. It no longer applies. What we have to do now is special tax up to 1%, which is being discussed and included at the Senate level in the tax reform negotiation, and it's being addressed by associations in the industry. And please bear in mind that the Brazilian tax system already has a high burden on oil production. The tax burden is going downwards about oil production, and which is bad because investments are not so competitive in Brazil. So this is a point to be considered in future negotiations about the tax reform. Mastrangelo, could you tell us more about reserves and resources at Oliva? Monique, about Atlanta, I think I answered Louis' question. For Atlanta, we don't expect to see any changes. This is very much in line with previous certifications, okay? Oliva, it's too early to talk about reserves, but probably we'll focus on resources. We are still on the concept phase of the project, so I believe it's too early to talk about volumes. Okay, thank you.
The question and answer session is ended. I'd like to turn the floor to Mr. Décio Oddoni for his final statements. Go ahead, sir. Oh, I think that this was a quarter that showed that Enauta continues to move forward, pursuing its objective of delivering Atlanta's full development system by mid of 2024, with robust conditions, on schedule, on budget. In the short term, we continue to work to resume production in the pilot system of the field, and we continue to pay attention to possible moves in the market. I'd like to thank all of you who honored us with your attendance at this video conference call, and I hope to have you on board again in the beginning of next year. Thank you very much, and I'd like to wish everyone a good day. Enauta's video conference call is closed. Thank you for your participation and have a great day.